Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday the 26th of March, starting off with the FTSE 100 where we have that double failure at or above 7,600 over the last couple of weeks, and then the weekly close below the 200-day moving average. Not a good look at all, not a deadly look, but not a great look. It looks as though also we've got the 200-day line flattening now, which probably more ominous in fact than closing below it. The current trajectory is that below the 200-day line, around 74.20, we risk obviously retesting the support area of the past week, around 72.06. But if we can stay above 7200, that's nominally the neckline support of a complex topping formation, bull trap through 7600 that we had to start this year. So everything now really depending on 7200 probably rather than 7300, which has actually been the lasting support area for this market. Below 7200, obviously 7080 is was the original resistance in October, and then below that we're looking at the lows of October. But probably you've got to say where this market might actually find a base at the moment, around 7200, the preferred area, rather than anything more gloomy than that. Moving on to the DAX, and here you can see that we've had the 50-day moving average failure. We bounced off the floor of that rising trend channel, that uptrend line there from October. That's around 14,800. Below 14,800, obviously the risk of testing old November-December resistance and the recent support at 14,500. Nightmare scenario would be if we had to go back down to the 200-day moving average area, which obviously the FTSE is already well below. So great outperformance here from the DAX, but we wonder whether it is the FTSE leading this situation or the DAX actually being less negative than the FTSE and actually hinting that the recent troubles in the markets will be over soon. Moving on to the Dow, which was never really one of the bullish markets over the turn of the year. We just managed to peak out again through 34,000. But at least we do have that line, uptrend line there from October. That runs around 31,800. It would be nice to see, after that decent candle on Friday, an end-of-day close back above the 200-day moving average to give us another go at testing the 50-day line, currently at 33,200. If one was sort of backed into a corner, one would probably say that there may be at least one more test of 31,500 recent support before this market can regroup. We've also got the market below RSI 50, and so while we're below that, we still have the risk of further downside. On to Bitcoin, which has been star of the show in relative terms. A nice move here today over the weekend, which is useful. I already highlighted that bull flag that we've got above former resistance as well. It looks like a mid-move consolidation, so that should be enough to get us up to 32,000. And the main one-year resistance for this market, anything above 32,000, I think the bulls would be jumping for joy. And the upside here, while we're above 26,700, the initial March peak and recent support for this market. Also got the RSI well above neutral 50. It's at 61, but now not overbought, so that may be the propeller for a potential move through to 32,000. Below 26,700, there is the risk of 25, but not much lower than that at this stage because we've got the rising 50 and 200-day moving averages chasing the price action at the moment. On to the small caps, and starting off with Alchemy, if I can type it out properly. Here we've got situation where there's just the first hint that we bounced off the floor of that broadening triangle from November, bounced also above the rising 200-day moving average, so that is a plus. If you're cautious, you probably want to see an end-of-day close through the 50-day moving average around £2.45, but the reason for including the stock today is that we've bear trapped from below that initial January support there, around 205 pence. So the longer we stay above 205, the greater the chance of a bounce off this triangle and taking us back towards the main resistance now, which is in the 280 area. Next stock is a stock company which I interviewed relatively recently. Shares seem to have stabilized here at the floor of that rising trend channel from June, so ideally we don't have any price action here back below the 8.75 or 9 pence area. The next trigger for a new leg to the upside would be an end-of-day close above the still rising 50-day moving average at 10.75 pence, so maybe that's something to put in an alert for. Top of the channel there, up to 18 pence, which could happen as soon as the end of next month on the basis that the RSI is now in oversold territory and the shares are finding stability at this level. Stock which I haven't covered for quite some time is Argos Resources, and on the chart here you can see that we've broken a line of resistance there from back in November, also broken above the 50-day moving average at 1.15 pence, but the line there at 1.25, and above that we're looking for 2 pence, perhaps as soon as the end of next month. Bullish divergence started the recovery here back in January, and we put in largely higher lows ever since. We've got the 50-day line rising as well, so that's a plus for the bulls. On to critical metals, which I met during the week. Here we've got a situation where we've got the shares trying to find support here, 23-24 pence. Maybe it may be a bear trap from below the old January support there around 24 pence. But we've got the rising 200-day line there at 21, so hopefully the shares will either hit that and rebound or bounce above that particular feature. If you're cautious, maybe you wait for an end-of-day close through the 50-day moving average at 25.6 pence before assuming that a resumption of the November-December rally and a 34 pence target is on its way. There's an uptrend line in the RSI window which is still holding, which is also quite a positive for the situation, and presumably there'll be a bit of a bump up after the mention in the press today. Global Petroleum is the next contender, and here we've had an attempt at breaking that falling wedge from May last year. We want to see more price action for the shares above, really above 0.32. Above 0.32 on an end-of-day close, then we're looking for as high as 0.5 over the next 1 to 2 months. If you're cautious, you wait for at least a couple of days close above the 50-day line before deciding that the shares can retest last August's resistance area. Moving on to a stock which had good news recently from memory, and beautiful setup at the moment. We had that we've had an island gap bear trap for the stocks are gapping down, then gapping up after a new low, rising 50-day moving average, and the shares holding most of that big up day on the 20th. So that also makes it look pretty strong. The message here is really above 1.4 pence, looking for up to 2.6 pence as soon as the end of next month. That unfilled gap to the upside off the low and the bullish divergence, rather, both very strong signals indeed. Speaking of strong signals, next stock is Hummingbird, where we flagged that the shares were possibly going to go from 7.5 pence, breaking that resistance line from January, up to 11 pence. They've already done half of that now, practically, so that's a pretty good indication at the moment of strength in the stock. Uptrend line in the RSI window. We closed above the February peak there at 8 3/4, above 8 3/4, looking for, let's say, an easy move up to the top of that rising trend channel from August at 11 pence, and hopefully that will be well before the end of next month. The other plus point, I suppose, is that the big rise on Friday was against a very weak general market, so clearly there was interest there. On to a stock which I haven't covered for a while, if at all, actually, Ingenta. Here we've got the shares rebounding off the floor of a rising trend channel from back in July 2021, and above the £1.15 area in the 50-day moving average. We're looking for £1.60, perhaps as soon as the end of next month. So a nice little setup. What's really positive here is the way that new support has come in well above old resistance. So the old resistance in the summer below a pound, and the new support above, largely above 105. So that is looking pretty strong. And we've also got the 50 and 200-day moving averages, both rising in parallel, which is effectively a golden cross. Another strong stock, which I haven't looked at enough, I would say, is Mineral Financial Investments. And here you can see that we've had a great breakout through 20 pence over the last, basically this month. Looks like we've got a target there as high as 32 pence from a resistance line projection from back in, if I can get it, 2019, I think was the start of that line. In fact, 2018, so above the low 20s, looking for at least 32 there, but this looks like a long-term and sustainable move to the upside for mineral financial investment. So well done to holders there. The recent resistance around 21, so above that, looking for 32 on that situation. I can't resist giving Premier African another look, as it's been, again, another of those strong performers on a bad day on Friday, bad into the week for the market. Here we've hit the original target that we were looking for, around 0.8. Above 0.8, looking for as high as a penny, which is a December resistance line projection. Hopefully we'll get that by the end of next month. Multiple bounces off the neutral 50 RSI level, which is a decent leading indicator for the next month or so, as it was back in January, February as well. So a strong situation there. Quadrise is the next contender, and here you can see that we've flipped up through the 50-day moving average area. In fact, closed the week just on the 200-day line around 1.6 pence, or just above it, in fact. Above 1.6, looking for 2 pence, which was resistance on the way down. The reason this is such a cool chart is because we've had a bear trap island reversal, and the unfilled gap to the upside providing, well, the top of that providing support for the shares ever since the end of last month. Good stop loss would be the 50-day moving average, now starting to curl up around 1.45 pence. Shanta is next, which I covered quite recently, and it looks like it's on the second attempt attempting a break to the upside, so above 11.5 pence, and that 2021 resistance line looking for as high as 18 pence at the top of the broadening triangle from the end of 2020. 2021 obviously makes sense with the gold price looking good at the moment, that we'll see some decent upside there. More difficult situation is Valerix, which, if I get the right stock, is a situation which looks like it's slowly recovering. Here you can see the broadening triangle and strong price action on Friday, which I think is rather telling. A bear trap rebound from below the old 9.15 pence support from February, above 9.15 pence, looking for 13 pence, perhaps as soon as the end of next month. Nice bullish divergence line there from December. That should allow the shares to pick up nicely. If you're waiting for anything here, probably be waiting either for an end-of-day close of the RSI through neutral 50 or an end-of-day close above the 50-day moving average at 10.25 pence. Finishing off with Verici or Varici. Here we've got a situation where we've got an uptrend line, bullish divergence line there from back in January, and looking for the shares to initially hit the 50-day moving average at 8.75 pence, hopefully by the end of this month, and then hitting 14 or 15 pence by the end of next month. But nice turnaround there from Verici, and the RSI backing a turnaround scenario. That's it from me today. More updates during the week.